here we are approaching the end of another financial year, and what does that mean? It's tax time, and when it's tax time, always good to get some insights, at least to alert us to the bases that need to be covered when it comes to the end of financial year, whether you're in business or whether you work for an employer, what circumstances you might be in. This is an important time to consider. And Gavin Martin from Cornerstone Wealth is with us once again. Hi Gavin, welcome back to 2020.
G'day Neil, great to be with you at this busy time of year.
It is particularly busy. It's busy for us, it's busy for everyone, and people who are in business are obviously looking forward to getting beyond this end of financial year, because it does create a whole lot of business, but it's an important time not to leave important issues unresolved.
Yes, it's important to address both your tax and your superannuation issues at this time of year, because particularly from a super perspective, you need to actually have the payments made for them to count. Sometimes with tax we can actually account for things after the end of the financial year, but with superannuation you do actually have to have made the transaction for it to count for this financial year.
Now, I guess, Gavin, most people in family situations might be having their superannuation issues covered by their employer, or at least your accountant in your business workplace. What sort of things really need to be attended to when you're actually trying to get those things in place before the end of financial year? Yeah,
one of the key things to address this financial year is that last federal budget, the government announced that they would allow a standard $500 deduction for work-related expenses. Now that actually didn't get implemented, and so if you thought that you didn't need to keep your receipts to claim work-related expenses on your tax return this year, you're wrong. You actually need to actually keep those receipts to claim all the deductions in relation to your work expenses. So just an important one there to remember. But the opposite is the case with what we call the education tax refund. So those people who have children at school, previously you had to keep all your receipts to claim that refund, but the government has announced and legislated a replacement to the education tax refund, being the school kids bonus, and that means now that you don't actually need to keep your receipts for it, it will be an automatic payment.
Now, Gavin, I guess at this time, most of us who are working for an employer don't do our tax until after we've received a statement from our employer that we submit to the tax office. What sort of things ought we be doing to get ready for getting that tax return in? Because obviously if there's going to be a refund, we want to get it in quickly.
Yes, it's important to do that, and there are some things that you can do prior to the end of the financial year. So one of them we mentioned is keeping our receipts to ensure that we've got the right records to claim the deductions. But there is still the government co-contribution that is available this year at a full 100% return. So if you're fully eligible for the government co-contribution, that is, you earn less than $32,000, if you put $1,000 into your super fund, the government will match it with $1,000. Next financial year, the 2012-13 financial year, that bonus or that co-contribution is going to halve to only $500. So well worth considering for those people under $32,000 of total income, or you can get a partial co-contribution if your income's less than $62,000.
Now, Gavin, when it comes to talking these sorts of tax tips, obviously every individual is different, but when it comes to lower income earners, middle income earners and higher income earners, we can probably all set ourselves into one of those particular positions. Are there particular things that you need to take notice of if you're in a lower or medium or a higher income bracket?
Yeah, those people that the lower end of the spectrum could potentially, and they were married, they could potentially take advantage of what we call the eligible spouse contribution. And so this is if you earn less than $13,800, your spouse, who might be paying tax because they're earning a standard salary, they could put $3,000 into your superannuation fund and get $540 back additional on their tax return. So it's a small thing, but if you add up all these small initiatives, it can be thousands of dollars each year that you can save. So that's one for the low income earners. People on high incomes, in particular, a unique opportunity this financial year is that people who are earning over $168,000 as a family, they can actually pay their private health insurance premium this financial year, before the end of this financial year, for the coming 13 months. And they will not be impacted by the reduction in the rebate associated with it. I know that sounds lots of double negatives there, but effectively, if your family income is over $168,000, you're going to pay more for your private health insurance in the next financial year. But you can save on that money. You can save on your premiums if you pay them in advance before the 30th of June.
Gavin, it's often, I guess, the likelihood that if you're a high-income earner, you've probably got some advice when it comes to tax time. Either you've got an accountant or someone who's looking after your taxation return issues. But for lower-income earners that can't always afford to have an accountant or someone particularly to give them some advice, these are the sorts of things that really need to be listened to in order to get the most from a tax return.
Yes, exactly. It's important to do so. And if you're even on a low income, you can be paying 15% tax, or in the new financial year, when you earn over $20,500, after that threshold, you'll end up paying 19% tax. So it is good to put savings, if you're eligible, into other structures like the First Home Savers account. That's particularly useful for those who haven't lived in a home that they owned previously. They can limit their tax to 15% per annum, but can also get a 17% co-contribution from the government on the first $5,500 that they put into that type of account.
Gavin, I noticed that on your website you have like the top 10 tax tips. There are a lot of organisations that have these sorts of tips that are available free of charge for people who want to get a hold of some advice when they're doing their tax. It is, I guess, worthwhile getting a hold of a list of tax tips so that you're not overlooking some important areas. Yes,
not all the tips will apply to everybody, but as we've talked through, different demographics and different income levels will find the tips useful, or not all tips, but some of the tips useful. Yes. Well, Gavin, it's always a pleasure talking, and we'll catch up again next week and talk about some pre-end of tax year advice. Gavin Martin, Cornerstone Wealth, and there'll be a link to Gavin's site when you go on to the site at vision.org.au. Look for the 2020 page, and there'll be a link to Gavin's website. Hi, Gavin. Gavin, thanks for being with us today on 2020. Happy end of financial year, Neil.